Why does Buffett suggest an S&P 500 index and not an MSCI World Index? Buffett suggested in his last will that his inheritance should be invested in an S&P 500 index. Why does he prefer this to the MSCI World Index or STH similar, which covers not only the US, but most of the developed Western industrialized nations? Wouldn't it be better? BC it's more diversified? He's bullish on the US. Buffett's view is that the US-only approach is fine because he believes in the future of American businesses. The US is a bit different to other countries because it has the reserve currency and a much bigger economy. Objectively, the US is one of the only countries that has significant production in basically all industries. Most other developed countries are heavily biased towards specific areas. For example, Australia is banking and mining biased. Buffett invests in what he knows. He knows the US better than the world, and has a greater comfort of more stability relative to other parts of the world. This may prove out to be wrong, but looking at the past 50 years this has been true, with a few bumps in the road here and there. US companies are capable of taking advantage of investment opportunities overseas. So the S&P 500 has plenty of international exposure already. Plus, you steer clear of all of the frictions associated with international investing like exchange rates, transaction fees, unfavorable business environments, etc. You want to own assets in a country that has good laws, is pro-investment and values capitalism and competitive markets. Look at historical performance of S&P 500 compared to MSCI World Index. America. I feel bad for all those people who have been investing 20 in international funds with their 401 KS. Because MSCI is dog shit, bro. I hold 25 of it because some douchebag online told me diversifying a bit is essential. This shit has underperformed the entire time. Every day I wonder if I should sell it, but I've convinced myself that one day this MF will outperform SP and provide a hedge. Clown face, it's me. USA, USA, USA. I am a Europor. Believe me, you don't want to invest here. More diversified does not mean better performance. In fact, it usually performs worse. The benefit is downside protection. 'Cause he knows the rest of the world can't compete, save for maybe ASML. Because most of the world will likely not perform as well for a myriad of reasons. EU, for example, is much older, has higher pop densities and has little room for growth. Further, they are not very unified and many nations are not self-reliant. That is not to say that some nations won't do well. Certainly some will. India, for example, did well the last decade, but others might surprise you. Many think that China, being an emerging market, is doing well, but their index has actually significantly underperformed the USA since the start of their growth period in the 90s and 2000s to the tune of about 2,000. I believe the S&P 500 gives very big returns because the boundary conditions in that country allow mega corporations to thrive, and also because the citizens invest their pension funds in the market. The latter makes those returns a self-fulfilling prophecy as long as the demography keeps having more workers than retired people. Plus, those investments grow over time as salaries raise due to inflation, compounding the growth over time. Diversification is a hedge against ignorance. The S&P 500 is both diversified and only contains winners. Underperforming companies are removed and growing companies are added. It's diversified because it is curated to contain different sectors. Broader indices contain more losers, and underperforms narrow indices may not keep pace with the broader progress of the economy. The average person has zero ability to do a full accounting teardown of foreign companies. The U.S. economy is what it is because the U.S. offers everything business need to thrive. If the U.S. economy goes down, the world's economy will go down as well anyway. I agree with Buffett that the potential upside of the U.S. economy outweighs the risk. He doesn't really believe too much in diversification. His view is that he understands the U.S. and believes in its future. In general, Buffett tries to minimize diversification. He repeatedly preaches that the logic he and Munger use is if you diversify simply as a portfolio guideline, you're freely admitting you aren't confident in your top picks to begin with. Let's face it, the world kinda sucks. The US has been dominant the last 125 years. Maybe there is something with this capitalism thing. Lots of trash in world index. Have you seen the rest of the world? Because nobody fucks with America. USA ain't stopping, that's why. It is dominating in military, tech and AI. On top of this, if anyone emerges, USA will surely destroy them through tactical or direct approach. SP is the safe bet. Americans' patriotism seems to cloud their judgment a bit in this thread. US is better for business. Included world indexes would include places like the EU with heavy regulations. Diversification isn't always good. What you're suggesting would be called diversification by Berkshire. Diversifying for the sake of diversifying kills your alpha. Because if you're not first, you're last. America, we love you. That's why. SP is simplest while simultaneously maximizing passive inflows to Berkshire. He's a boomer and he succeeded at the peak of US dominance. Domestic companies still have international revenue. 55% of Microsoft's revenue comes from overseas. Wouldn't it be better? BC it's more diversified? No. That's not how diversification actually works. In fact, the MSCI is likely not more diversified than the SP 500 because the same global forces that impact banks in country A will impact banks in all other countries. Owning more banks doesn't make you less exposed to that sector risk. Diversification is only good if you don't know what you're doing. Because he is patriotic. There is no other reason. BRKS is composed of USA companies. It's like saying buy my company. Hyperconsumption only happens in the US. I'd rather be in control of my domestic to international investment ratios. I believe that over the decades, international business will catch up, but for the next decade or so, the US will still perform as one of the best markets. Everyone ragging on the US market if you haven't put a significant portion of your 401k in foreign markets, you're a massive hypocrite. If you have, you're a fool. And if you don't actually have any retirement, you have no business opining whatsoever. He suggested it when SPY was reasonably priced and wasn't 25 composed of 5 tech meme stocks. I buy VO for my US exposure. Let's you were creating a soccer team, and you could choose anyone in the world. Would you pick exclusively from national teams, or would you also recruit from your local high school's JV team? Because America. You don't want Europe dragging the index down. Buffett suggested oysters and beer every day of the year and I'd feel fine. Never bet against America. I believe SP has consistently given a better return than world index funds. Even emerging markets only saw a brief period of beating the US market. Far better to bet on Nasdaq to target a higher return. 'Cause MSCI blows big donkey testicles.